Good day, everyone. This is Dennis Day with Getting Your Edge, how to downsize your home with my co-host, Judy Gratton.
Hi, Dennis, and Happy New Year. We're looking into the search engine optimization, all the technical details regarding our podcast. We found that the name that we had was a little too broad. What we're really focusing on is downsizing. Hopefully, with this name change, we'll be able to help more people.
Sounds good. It's 2025. Let's go over what happened in 2020 with the real estate market. Are we ready?
We are ready.
Oh, hang on. Oh, okay. Judy, let's take a look at our slides that have information about what's going on in the real estate market 2024. Let's look
Okay.
broadly at the entire United States. We had a down year in 2023 and 4 million homes, a little over 4.1 million. That was pretty low. And 2024, this is entire US, sold 4.6. Well, those numbers doesn't seem much, but that is 500,000 more homes. It was a better year.
It was a better year, and hopefully 2025 will continue the climb. If you look at that, what you're seeing here is in 2021 and 2022, we still had those emergency interest rates. At one point, I knew of someone who actually got something in the twos, but it was basically between 3 and 4% because we had COVID. And as we came out of COVID and trying to slow inflation, they started to raise the interest rates in 2022, and people put the brakes on buying. They're now up into the sevens, but it's still a pretty darn good interest rate. It kind of cuts your buying power in half. And if you are a first time home buyer or a median price home buyer, that can make a huge difference. We're headed in the right direction.
The home prices overall US rose 4.3%. So interestingly enough, even though we had these high interest rates, homes were still selling, just
Yes.
not at as great a price. Prices are still rising.
Remember, this is a general United States overview. In some places, it was still a crazy market,
Mm,
which
okay.
we'll see here.
Yeah, this is for the entire USA. Goldman Sachs puts out an affordability index, and this
Mhm.
tells affordable homes are. You can see the up and down. We're down at 70. This is extremely low. The combination of high prices, high interest rates, low inventory has made housing extremely unaffordable for many people in the country.
Considering that most people, the wealth building that occurs is in the home they buy because appreciation pushes them up, and hopefully, it always will. But because we don't make real estate anymore, we can build houses on land, but when the land's gone, appreciate home prices will always continue to go up. In 2006 through 8, when the economy crashed, and so there were so many, unemployment was huge and prices lost half their value in many people's homes. So there's your first unaffordability. But the rebound jumped incredibly. A lot of people could afford to buy because homes were still relatively undervalued. Then it leveled off again. In 2020, we had the emergency interest rates start with COVID. At that point, people could afford to buy more home because the interest rates were lower. And so you saw the affordability become higher. That continued throughout COVID until we started raising interest rates again, and then down it goes. And it stayed down there now because the interest people say, I'm waiting for the market to crash. And it probably won't. If it does, we're going to have another emergency, which could mean that when it crashes, you may be unemployed. If you are someone who has a lot of money and it crashes, well, yeah, you're probably going to make a killing because home values will drop. I recommend that people wish for a crashing market. It would be nice to see it stabilize at a rate that people were accepting, but I wouldn't recommend saying, I'm waiting for the market to crash. Not a good idea.
Yeah, I'd love to have 3% interest rates for everybody. but it
Right.
meant that we were in lockdowns, millions of people were dying, and I'm not ready to go back to that myself. So zoom in a little bit. Washington State
That's
from
where we are.
2023 to 2004, six increase in 2024 alone.
That is referred to as your appreciation. So from what you paid for your home to what it's currently worth, it went up 6.2%. So if, that's pretty normal in the Northwest to be somewhere between 4 and 7. So we're still appreciating at a good rate. When they were appreciating, at 25%, I think was that 2020 or 2021, there was a 25% appreciation. That's where people begin to not being able to buy because the homes have raised so incredibly. Even at 6%, when you're saying, I'm waiting for interest rates to drop to buy, if you can afford to get into the real estate market, buy it. Because next year it's going to be 6% more expensive. And you're just going to be chasing that until we have an emergency crash. You can always refinance at a lower rate when rates get better. We have a saying, marry the house, date the rate. Because if you get it now, you're getting it at a better price and you'll be able to get it next year, most likely.
For buyers, this is not that great. You're paying $70,000 more than you were in January 2023. If you got in
That-
before January 2023, your equity rose by about $70,000 or 6.2%. That's
So
good.
for the homeowner, if you bought on a conventional loan with 3% down, they're going to require mortgage insurance. And a lot of people don't like paying that mortgage insurance. If your home appreciates by 20%, now your home is worth 20% more, and you most likely will be able to get rid of the mortgage insurance because once you have 20% equity in the home, the mortgage insurance on conventional loans generally goes away. You have to contact your lender and they'll probably want to do an appraisal, but it can be removed. That is not the case with FHA mortgages. You have to refinance out of an FHA mortgage to get rid of the mortgage insurance. So once you have 20% equity, you most likely would want to do that.
This is an interesting comparison here. We look at the closed sales. August 21 was kind of the peak of the frenzy time, and we were closing at 122,000 homes that month. This
Yeah.
is just Washington State. Now we're dropping down here, and you can see, well, we're only closing 75. That's a pretty significant drop. It
That's
bottomed out at 71,000 per month in March 2024. How's that?
Well, in a way, this particular slide, I think when we looked at it the first time, I was seeing August of 2024, and that's a different story. That we'll talk about that in a minute. This is showing that the buying power of the public and interest in buying has dropped. The sellers are not selling because there are no homes on the market. So we're in this real catch 22 period of time. It started in 2023 when the interest rates started to rise. That's where you begin to see it dropping. Homes have sold, they have appreciated, they've gotten more expensive. These people that wanted to buy don't anymore because the interest rates are too high. No, the houses are too expensive, and there aren't that many on the market.
If we compare August 21 to August 24, you can see, I mean, that's
There. Yeah, that
50,000
would
less
be
homes. So
that's
it's a lot.
that's
38% increase in closed homes.
it's a lot for
Uh-huh.
those people like us that make our living selling homes too.
Again, focusing in a little bit on central Puget Sound. And all right, so we got four different areas in St. Pierce, Snohomish, and Kitsap County. And
Mhm.
that makes up the bulk of Washington's population. Now, there's a whole bunch more land in Washington, but this is the counties that most of the people live in. The median sales price right
Want
here.
to explain to people what that term means?
Median, which is something I like better to use than average, tells you right in the middle. You take them all and you add them up and then divide. and you get an average price that tells you broadly how much approximately. But a median tells you half are above that price and half are below that price. For me, it's a more accurate representation. A $25 million Russell Wilson home selling can really skew the average price, but the median price has less of an impact.
Each of the counties varies. The median price went up by 2.6% in King County, which is our largest populated county. That's where Seattle is, and Bellevue and places like that. Pierce County went up by 4.9, and that's down in the Tacoma area, which is another large city. Snohomish County had the greatest rise in median home values, and that was 12.2%. Snohomish County covering Everett, Marysville, Lake Stevens, and then a lot of smaller cities, Monroe, places like that. And
Kitsap's County going to be the west, Bremerton, Bainbridge Island.
okay, sorry.
mm.
Such counties I'm not real familiar with. I don't do a lot over there because you got to take a ferry to get there. I
Mhm.
will, but I haven't yet.
Should see the prices have it really hasn't changed a great deal
No,
compared to what we were seeing in 21, 20, where 20 and 20% gains every year, killing new buyers. Great for
first
homeowners.
time home buyers.
So we haven't changed a lot. King County has grown over the past 2 years somewhat. Snohomish County, like I said, it's been pretty significant, but relatively flat in Pierce and Kitsap counties.
I wish this went back, because do you see this is 2023, 2024, right? It'd be interesting to see King County prior to COVID, because when COVID happened, people in the Seattle area and people who lived in the city started moving to the suburbs. They could have a house with a yard for their children to play in because we're all at home. Suddenly it was really hard to live in a condo, and kids weren't allowed to play together in parks. King County really took a big hit. A lot of people sold and got out of King County. And some of this may be rebounding, coming back into the larger cities.
Median days on the market, again, not an average, half above, half below. This slide shows the cyclical nature of the real estate market. Days on the market, nearly 40 days up here. It slides down until we're below 10 days.
In
That's to be
midsummer, kids are out of school. People can move more easily in the summer than in the winter.
Then we're bouncing back up to 30 days at the start of
And in the
winter. When we get to April, it's back to 6, 7 days, probably getting multiple offers, perhaps bidding wars. Not as big as the peak of 2021. Right now,
buyers are becoming more accepting of the current rates. They want to get into a home. They have reasons they need to buy. Rather than hoping that the rates are going to drop to 3% again, people are beginning to move. Not as many.
median percentage of original list price.
Do you want to explain that?
Yeah, this is so a homeowner puts the house on the market. The original price is what they ask for the first time when it enters the market. The median is half above, half below. Then the percentage is of the original list price, how much you got at sold. If it's below, like it was 97, 98%, meaning the seller is not getting full price for the sale of their home. If it's up here at 100%, that means you list a home, you're likely, if you price it right, to get 100% of what your asking price is. Even had a little spike here where we are above asking price. Okay.
And if you notice, that is in Snohomish County, where we had the largest increase in number of sales in the same time frame. So
right. It also shows when is the best time to buy.
Yes. If you're a buyer and you want to get any kind of deal on a home, Your chances are much better as you get closer to December or the beginning of January. Once you start moving out of January, prices begin to climb. And you saw that on that one slide that in April is where there were the least number of days for a home to be listed until it goes under contract. That's what we refer to as days on market. For a seller, you would be better to try and put your home on the market sometime between April and September. Most of the appreciation is going to happen in that first portion of April, May, and then June, July, it's going to level off. You'll be at the top of the appreciation in most cases, and then start going down again as we head into winter. The decision you make on when you're going to buy or sell, there are some statistics that show you when the best times are to do those two things.
Some people can't choose when they buy or sell. If you're a buyer, December might be a good time to buy. There's less homes for sale, so your inventory is not as great.
I always tell sellers if they have to sell in the winter months, there's not going to be as many buyers out there, but they're really serious buyers because they're moving in the winter months and the rain and school and all of that.
Right. Let's recap. They grew in Washington State 2024 also, but 6.2, so a little above the national average. 500,000 more homes were sold in 24 than 23. 23 was a down year for sales. It's picked up 500,000 homes. That's over the whole course of the United States. It seems like a huge number and it's not insignificant, but it doesn't compare to what we were doing at 2020 levels where we're selling 120,000 homes in a month. The inventory is still well below 2022 levels.
And we're hoping that that inventory will begin to go up. Zoning changes, permits, and ease for builders to be able to get those permits to build. I know in our area, I see a lot of notices from the city saying that they are going to be something built, and it's normally apartments or homes because we have more people now than we had 10 years ago.
Home sellers were getting at or near 100% through 2024, unless they sold in December. But really, if you reasonably price your home, it's going to sell at about 100%. That's not bad. It took a little longer.
Continuous days on market is from the time it is listed on the multiple listing service until you're under contract, not until you close. That's how many days you can expect people to be coming in and out of your house.
Summertime, you're looking at 10 days. December, it probably will still sell.
We sold the house in 4 days. It just depends on where it is and what the market will bear.
And what area you're in.
The area, the price point, the more expensive a home, generally, the longer it will sit on the market. When you start getting up into your luxury homes, they generally do sit a little bit longer because there aren't as many people out there buying that. But your middle class suburban homes, that's what most people go into. And so that's going to go a little bit faster than luxury.
I would say entry-level homes are probably going to go faster than most.
Condos are kind of iffy because that's not what people generally start out looking for. Some people do, but most people are looking for a freestanding home. The greater number of people.
What do we expect in 2025?
Very important.
I've added my notes down here.
Courses.
This is where I'm getting the information. I did some research on this, and I want to give credit to the organizations. Inventory for homes will grow, but so will home prices. Not at the 20% clip they were talking about, more at the 3.5 to 6%.
And that's normal appreciation, at least for the state of Washington. Yeah. And so we're in a normal area there. If more homes come on the market, if we start seeing more new construction for buyers, that's good. For sellers, now more competition. So you have to weigh all this information to figure out if this is the right time for you to sell and where you're going to go.
They're projecting that they're going to increase the amount of new home construction by 13%. That's significant. It could add up to over 1 million homes nationally. Doesn't solve the housing crisis, but it's an improvement over previous years. For the renters, rental prices in the King County and Seattle area has just been going up astronomically. And they really are saying that they're flattening out and they should remain pretty good. Seattle area has a significant number of apartments and condominiums and homes going that will flood the market later this year. So it should help with prices a little bit. It's tough on renters because they're paying a lot, even though they're not getting that equity growth of a homeowner.
Another big part of this that we didn't discuss is the fact that hedge funds have invested heavily in real estate and they're buying properties and then becoming landlords. They bought 26% of all the real estate in 2023 in the country. So that's another reason that there's a shortage of homes in your area, wherever you are, because they're owned by hedge funds. They're making money off of it by renting them out. So it makes it very difficult for people who want to be homeowners in middle income areas to buy when you're competing against hedge funds that normally pay cash.
Yeah. On the bright side, I did see from realtor.com that home builders are going to build smaller, more affordable homes. What they've been building, at least in this area, has been 3,000 square foot on a postage stamp lot, makes them the most money. But they're finding that people now are requesting smaller homes, maybe a little more yard, and more affordable. You couldn't consider going into a new home in our central Puget Sound area, a brand new home for less than $1 million. They're just not there unless you're buying a town. 2025 will bring mortgage rates will drop incrementally. We had 2 price drops in fall of 2024 and the rates went up.
They're not solely connected to what the Fed does with rates. They're also connected to the bond market, the US bonds. So people invest in bonds when the stock market looks shaky. And when they're investing in bonds, the interest rates will drop. When the stock market is great, they don't invest in bonds and the interest rate might even go up. That's what loans are tied to.
Home
For
buy,
homes.
especially first time, don't expect a huge drop and you will not see 3% interest rates unless we have huge disaster.
I don't see how it would happen. A lot of people don't believe 6 and 7 is good. I've seen higher interest rates even in the last 10 years.
The affordability index is going to remain high interest rates, high prices, low inventory, the perfect storm for making homes less and less affordable. Don't expect any big changes unless we have hugely significant happen.
There's a lot of uncertainty about what's going on globally and nationally. The Fed has said they will only lower the rate twice, but that hasn't really affected our market because it's tied to what the stock market does and what the bond market does. So there's a lot of uncertainty, but people have to move. Frequently, people have to move. And we're beginning to see that maybe people who had to move and didn't are kind of going, I can't wait any longer. I have to. And and so that's where we still have buyers. We also have a large international market that comes in and buys, at least in our area. As a middle class first time home buyer, you have a lot of competition. I wish that was not the case, but for sellers, it's absolutely wonderful. Although they do have to decide where they're going to go next. And that's where the rub has been.
I've been waiting because I got a 3% mortgage. I don't want to move. Prices are high. Interest rates are high. Is this the year that they'll start that process of downsizing?
I don't know. That's really what we are all about, trying to help that informed decision. When is the right time for you to go? The right time is when you can. The hard time is when you can't and you have to. If you're thinking about it, you need to weigh the pros and cons of then talk to an experienced agent who can show you what's out there, help you find something that's going to work for you. Preferably us if you're in Washington.
All right. That's it for our recap of 20, some projections of 2025. If you have any questions about today's topics or any other real estate questions, contact us through our website at edteam.com. Any last thoughts, Judy?
2025 is going to be a great year for all of us.
That people get off the fence and start moving. If you are a baby boomer or a homeowner who's been in their home for 20, 30 years, find out what your equity is. Be able to sell that home and use the equity to buy your next.
One of the things I would like to point out, these statistics are telling you the current market. We're always looking backwards to see where we've adjusted to up, down, and it determines every time someone's home sells near yours, it changes the value of your home. So it's very important for you as a homeowner to stay informed with what's going on around your home. How's your values changing? What is your equity? How much money do you in the house? What could you conceivably do with that money? All of those are questions that we can help you answer. We have a program that could set you up to automatically receive a monthly market analysis, pretty close what your home would sell for at any given moment. It does show how much equity you have. If there's a loan, how much of it you pay down. There's a lot of information in it. We'd be happy to share it with you. Please drop us a note. You can reach us edgegroupteam.com, and we would be happy to send that out. There's no charge, no obligation.
We can give you a market analysis and let you know a snapshot right now how much
very
your home is.
accurate.
All right. That's it for Getting Your Edge.
We'll see you in a couple of our next podcast.
Thank you. Hope it was helpful. See you next time. Thanks for.
Bye.